Yeah, we're seeing a renaissance of sorts in convertibles today. As interest rates have risen, a lot of corporations have started to look at the convertibles market for interest rate savings. If you look at a double B, credit rated corporation, they would be looking at 3 to 4% interest rate a couple years ago. Today, that rate's more like 7 or 8%. And so a lot of those issuers are starting to look at the convertible bond market because they get an interest rate savings. And then there's a tie to the equity market through a conversion feature, which is embedded in a convertible bond. So we're seeing a lot of opportunity in that space. We're also seeing a big maturity wall. Over the last couple of years, a lot of issuers were waiting to see what interest rates were going to do. So now that interest rates are moving up and potentially higher for longer, a lot of those issuers are going to have to refinance that debt that's coming due. So we're seeing around $4 trillion coming to maturity over the next 4 to 5 years. A lot of those issuers are going to look to the convertibles market to do that. In the active ETF space, we're seeing a tremendous opportunity and tremendous growth. Around 30% of all flows into ETFs are going into active ETFs, but they still only make up around 6 to 7% of overall AUM. And so we see a tremendous opportunity for folks to use active ETFs going forward. You see the SEC rule in 2019 that was issued really leveled the playing field for a lot of asset managers as they want to move into the ETF space. They can now build active managed strategies and a tax-efficient wrapper like the ETF. So we're seeing tremendous opportunity there, and that's where what Calamos is going to operate as well. But I think it's going to look a little different, than the traditional discretionary actively managed space and mutual fund world. What we're seeing in terms of flow, a lot of the flow into active ETFs is moving into those with rules-based strategies with an active edge. So that's how we're positioning our ETFs as well going forward.